Good morning, everybody. It is Monday, August 31st. I wanted to make a quick video going over the stocks I'm watching going into today's trading session. And I only have two on watch, and if you've watched this video, my weekend prep and review for the upcoming week, I talked about LULU, and the one I was doing a scan earlier today, and I found another one I liked, and that would be Pinterest, or Pins, P-I-N-S. So, but going into the morning, you can see that the market once again is still rallying, going higher. The futures are up, except for gold slightly down. But we'll see how the week goes. But this is what I have on watch. So, like I said, LULU. If you haven't seen that video, like I said, you can check it out. I talk about it a little bit, but I'll also discuss it here. So, why LULU? The reason I'm watching, sorry guys, this big pin thing is not wanting to work. Oh, there we go, wrong button. Alright, I'm still figuring it out. Alright, so, why LULU, like I said? Okay, so we have earnings right here, which is on pop up. Let's see when earnings is. I know I saw it a second ago. Alright, September 8th. Alright, so we could easily play position going into this Friday, which would be September 4th. And what I'm watching, the reason why LULU. Alright, so once again, we have earnings on September 8th, right? Alright, so that means it's going into earnings, and typically stocks don't move too crazy into earnings sometimes. What I'm expecting is, since there was no squeeze right here where it's dark blue, that means their momentum is slowing down. And it's also slowing down right here as well on the 195 minute. And it's leading me to believe that it's going to stay within the expected move for the duration going into this Friday. So the break-evens for this position I'm about to talk about are right here. So as long as price stays in between those price levels, then it's going to be profitable. Because what I'm talking about is the Iron Condor only holding for about 5 days, entering today and holding it into Friday. Now, what strikes am I talking about? Alright, and if you don't know how to read this, let me give you a quick overview. Alright, so think of it as a graph. Right here on the bottom, all these little numbers, that is the stock price. Right here is your profit and loss, and here's your median, which is 0. So that's how you read the graph. Now, you have a blue line and then this little magenta color, right? What those indicate is this line right here is the profit and loss for expiration day, and then the magenta one is for whenever it's the current day. So like as time goes by, let's say I entered it for $1.35. As days go by, because of theta decay, this is going to slowly get higher and higher and higher, and then that is how you get your profit loss off a risk graph. Alright, so what I'm talking about is selling within the expected move Iron Condor. And if you put your attention to this spot right here, the red one, what I'm currently looking at is selling this September 4th, 392.50, 397.50, 360, 355 Iron Condor. And so that'll be within the expected move. If I could get it for at least 20 to 25% of the spread, so that means 20 to 25% profit for 4 to 5 days, which isn't bad at all. And also, I didn't cover this part, this little red line right there, that is break even on the stock, or on the stock for the position at expiration date. And also another cool thing, if I can actually put your attention down here and watch it as I move the mouse. All right, so when I have it right here, it takes it away. Okay, so where you move the mouse, you can see the profit loss change, so you can evaluate per time. So for a one contract position, you can see your max loss is $365, but your max profit is $135. And then you could also see as time goes on, so you put out the red dot and you see where would my break even be? And then you look down, you follow the line all the way down the bottom, it says 358.67. Alright, so that's how you read a risk graph. So this is it within the expected move. I expect price to stay sideways going into Friday. If you have any questions, please write in the comment section below and I'll be happy to answer that as well. Alright, and the last but not least is Pinterest. Man, Thinkorswim acting slow again. Okay, so right here I had earnings. You see it gapped up. It's been consolidating ever since. So what I did was I got this swing high to that swing low, and here are your fib levels. So what I have two ideas. I'm either going to do unbalanced fly or a targeted butterfly. I'm more than likely going to do the targeted butterfly, but we will see. I want to see how the market opens up, how price is moving, and how much I get the position for. All that's going to be determined which position I'm going to do. So with the targeted butterfly, what I'm doing is I'm going to target this 38 level, basically meaning I'm expecting price to come up to this level by Friday. So I want to sell the 38s, and then I forget my wings. We'll look at that here in a second. But that is why I'm expecting it to go higher. Also, all right, this chart right here, this is a 195-minute chart. Those green dots are early end indicators, meaning it's going to move up. I mean, it just looks bullish, right? It's been consolidating. This white line is the 21 EMA. This is 34 EMA, looking like it's going to swoop up and head up to the 38 level. Not only because it's 100% because, or a retracement, because obviously that's going to be a resistance level. So I'm expecting a whoop and just get there. All right, and also move. Okay, also, there is a high compression squeeze, right? Oh, I guess right there. See the little gold dot says a high compression squeeze, meaning the Kelvin channels are within the Bollinger Bands. So looking for a move to happen. So what I'm thinking is this momentum indicator is going to slingshot higher. So it would imagine this one right here. So it's going to swoop up and then go light blue like it did right there for a move higher. And I'm looking for the same right here. And I'm okay with trading off the 195-minute because it is a short-term trade. It's only 4 to 5 days. Let me show you the position. All right, so the one I'm looking at the most is probably this. So the unbalanced fly, if you don't know, you can make a butterfly where one end is profitable. So, man, this pin is not making it easy. All right, so here's the current price, right? So if it stays where it's at, if it goes higher, you're gonna make more profit, but say it overshoots your other end, you still make a decent profit. With the current unbalanced fly that I have set up, with the 33, 38, 40, with we'll go to a one contract basis, go see No telling how people trade. So we got roughly $200 for a max profit. So you're risking 200 for a max profit of 293, and if you overshoot it, you make 97. That's the unbalanced fly, but I am more likely going to play this butterfly. And now why the butterfly? Because I could risk 100 to make potentially 400, and I am expecting the squeeze to fire, giving it a lot of juice to push it higher. Because if you're not familiar with the squeeze fires, and then it moves up to 2 to 3 ATR. So in 4 days, I'm expecting it to fire and shoot up into that level. So you could risk 100 and say it hits your target. Say it hits 38, like we're saying, and you still get out with 100%. But say price just lingers between 36 and 44. Like it hits your target at 38, hits here, but it just consolidates, right? Then that means we're going to get this much bigger profit. That's how you get a better risk to return, or your better reward to risk ratio on trades. So you could position this to where you're completely okay with you're okay with losing $200. So you want to buy 2 positions for $200 to potentially make you. Let's be honest, you're not going to get the max profit. But even if you somewhat get it close, you can still make 300% return. And pins is a big mover. And so we could actually, let's plot this real quick, 44. So the upper break even is way up here. I don't expect it to get up there. I mean, it can, but I don't expect it to get that high in 4 days. And then 36. So do we think it could get, or do I think, I guess, really at this point, it can get above this price level by the end of the week? And if you don't like that risk reward, you can also tweak it. Actually, let's go ahead, we'll do this. Boom. Now you could do this one with the current price with the market closed, but so you could risk for one, you risk roughly $200 to make a potential max profit 300, which more than likely won't happen. But you can still get 100% return. And look, since I made it wider, I brought the short strikes closer to the 100% level. So you see right there, that means if the price stays where it's at total, and as long as it just moves up slowly, then you can make a profit. But pins is a big mover. That's why I was kind of looking for that bigger move. But yeah, that's what I'm looking into the week. If you have any questions, feel free to ask around in the comment section below. If you found it helpful, please subscribe, like, share with your friends. Do whatever you like. All right, good luck trading today, everybody, and take care.